Moving on now, despite the economic downturn recorded in the second quarter of the year, quarter 2, 2020, investors in the Nigerian stock market gained about 332 billion naira in the month of August 2020, thus defying the negative sentiment from the country's abysmal gross domestic product GDP figures, which showed minus 6.1%. With barely 4 weeks to the end of the year and the current recession said to be the worst in more than 3 decades, the Nigerian Stock Exchange All-Share Index rose by 65% between April and November 2020, reflecting improved sentiments by investors on the fundamentals of publicly listed companies. According to a report from Bloomberg Terminal, the Nigerian Stock Index ranked third globally with respect to stock index performances. Consequently, the year-to-date performance improved to stand at 13.43% just in the month of October alone. Investors made a gain of about 1.934 trillion naira as the Nigerian bourse recorded its best monthly gain since 2018. I won't be doing this alone. I have joining me live in the studio to give an in-depth analysis into the performance of the market amidst the current recession and, of course, some economic issues. Is the seasoned financial analyst and stockbroker, Mr. Rotimi Fakayejo. Thank you very much for your time, Mr. Fakayejo, and it's great to have you in the studio.
Good afternoon.
First, what's responsible for all of these beautiful figures I was just reeling out? Despite the challenges, the stock market remains attractive and getting more interesting.
Well, I think one out of many other times that might have been experienced all over the world, the Nigerian stock market is not actually mirroring what is happening in the national economy. And I call this a lot of distortion. Though it is good for the equity market, but I think it's not actually portraying what is the reality with the Nigerian economy. How do I mean by that? If you look at the statistics from the various sectors, the inflation rate, the exchange rate, the unemployment rate, and all those other ones, they're in the negative. And the equity market seems to be the only focus for now, because money will always find where it will maximize returns. So we have seen the downward trend in the fixed income market. Yield is nearing maybe 0.5%, or even in some cases, much lower. So investors are wise, they are hungry for return, and as such, the only other way, legitimate, they can put their money right now is the equity market. So that is exactly the reason why we are seeing the upward tick in the market. But be that as it may, some quoted companies still continue to have sound fundamentals, which is a guarantee for investors that even if prices don't appreciate, they will fall back on good dividend return on their investment. And I think that is the thing that is actually giving investors succor to remain in the market. And I want to believe that we're going to have a sustenance of this position as we continue into the year 2021.
Now, earlier I was talking to Mr. Roberts, and we're looking at the Central Bank Governor's speech at the Bankers Committee dinner, which I know you, the Bankers dinner, that CIBN dinner, which I know that you would have also followed up some of the submissions at that gathering. Now, he said a significant outflow of funds from emerging economies, that foreign investors withdrew more than $100 billion worth of funds from emerging markets between February and April. Now, did that have any effect on our market, all of these withdrawals, taking away of funds and all of that, capital flight and all of that?
Definitely has a huge impact on our own economy. We so much depend on foreign portfolio investments. Nigeria has not really been attracting foreign direct investments, which actually should be the focus. And that is the only thing that can actually sustain the economy. For the foreign portfolio investment, they come invest in our bonds, invest in Treasury Bills, and other fixed income securities, and also in the equity. Now, they are giving guarantee that should they want to exit at any time, CBN give them guarantee that they will buy back those securities from them. Now, that is a lot of distortion to our system, because if you have brought in money, and we say the bond is going to be 5 years, 7 years. And some other fixed income securities that the tenor is about 365 days. And you come at 180 days and say because the horizon is not looking good and you want to go back with your fund. Then we begin to run a scatter, deplete the external reserve in order to satisfy that urge. So the movement of fund from emerging markets and frontier markets, which we belong to, has already affected a lot of economies within that space. So we are not left alone. Though we have our own local problems, which we have not taken care of, but this definitely had gone ahead to compound it further.
Indeed, it has. Let's look at sectoral activities now in the Nigerian stock exchange, banking, insurance. At this time, how is insurance stocks doing? Oil and gas, also some of our local companies like the agricultural. Let's just look at an overview of what's been playing out in all of these sectors. The banking stocks have always been liquid. Have they maintained that? Do they still have that strength, that kind of strength in the exchange as we speak?
When you talk about quality, when you talk about quantity and depth, the contribution of a banking sector stocks is huge. It's more than 50%. When you look at daily activity, it contributes more than 50%, and just being conservative. Now, when you look at other sectors, the oil and gas sector, in the last 2 years, that sector has really been bad. Really bad. Insurance sector, because of we increase the capital today, we extend deadline tomorrow, that also has caused a lot of distortion within that sector. So many of those stocks are trading below 50 kobo. They could have gone below 20 kobo if the system had permitted. Because for quite a long time, most insurance sector stocks were trading at par, that is 50 kobo. But when NSC and Securities and Exchange Commission moved in and removed that par restriction, whereby the securities could trade as low as 20 kobo, then we saw a lot of insurance sector stocks coming into that space as well. So those two sectors have really been not rewarding for investors in the last 2 years. Now, if you come to the banking sector stocks, which we have talked about, it's been very liquid. Industrial goods, there have been quite some good return. Food and consumer goods is quite there also. Then we have two major ones in the agricultural sector, which is Presco and Okomo Oil. And those ones too have been fantastically okay for investors. So I think when you look at it broadly, I think those that are not doing well are really form like about 20–30% compared to those that are doing well. So the equity market is still a safe haven for investors to put their money in.
Far above average, that's what that is. That's about 70%.
Yes.
That sounds very good. Let's now end up with some of these EU issues, talking about inflation, the fiscal. You talked on that. Fiscal and monetary side, everyone still says a lot needs to be done to synergize so that we can have policies that both sides will complement each other. A lot is being done by the CBN. We keep hearing them reeling out all of this. But like Robert said, we can't keep throwing cash at all of the problems. We also have issues around electricity tariff, VAT, farmers' headers clashes. It's going to affect price of food, which is key. And our salaries remain the same. How do you see all of this playing out? And one way or the other, do you think it won't affect trading? Treasury bills remain unattractive at this time.
Well, there is a lot of divergence in the policy formulation and also policy implementation from both the fiscal and the monetary authority. I keep saying it all the time. For the monetary authority, I think you can give them a pass mark. Or for the fiscal authority, I don't think there can be any mark ascribed to them at all.
Maybe the challenges were just too much.
Not really. Because looking at it broadly, the CBN has been fighting inflation, exchange rates, majorly with monetary supply. You understand? And that alone is not enough. If a country is not productive, if in everything you are import dependent, then all those things will eventually fail. And that is exactly what we are seeing now. So the kind of instruments that CBN has been using are not being complemented from the fiscal side. So where we are the infrastructures, we keep talking about this all the time. There hasn't been any improvement. Where are the roads? Where is security? All these things are affecting a lot of things. The health sector is like moribund. The education schools have been shut for upward of 12, 13 months. That is universities, even before the COVID pandemic. So all these things, we seem not to be a focused country. Because if we continue to toy with human development, then definitely we are going nowhere. So all these things are coming together to play against the Nigerian economy because there is no vision. And I only hope that maybe with what we saw during the lockdown of how vulnerable we are, maybe, although I can't say anything positive in the 2021 budget, but maybe some things could happen and things will get better.
It's a good way to leave it. Mr. Rotimi Fakayejo is a financial analyst and a stockbroker. I must thank you very much for your time. It's always a pleasure having you on the show.
My pleasure too.